Hi, Ryan. It's Grant Abbott speaking. Thank you very much for giving me your time. An hour on crypto and NFTs, blockchain, a whole lot of stuff, but more importantly, the launch of the world's first crypto trust. You think, well, what is a crypto trust? And I must admit, when I first started pushing this out, Ben from Lightyear Docs, a good mate of mine who we worked together at Now Infinity, and he moved over to class for a long time, he's now come back as a director at Lightyear Docs. So he was in my ear for a long time about doing a crypto trust. And it just takes me a while again to go through. I've drafted up, if you jump onto the Lightyear Docs site, you can see there's over 150 documents. I've drafted up essentially all of those. There's a new tranche that's coming along. For those of you strategist members, a whole new HR tranche that's going to come in, employment contracts, a whole suite. So that's something else that you'll be able to offer to your clients, and that's just packaged up in your current subscription. So we keep on expanding it out. Now, the crypto trust at this stage is only available through Abbott Mourly, but we will, once, because it's a brand new thing, once I've settled it down, because there's quite a bit of data capture, then what we'll do is we'll then offer it out on the Lightyear Docs platform. A shareholders agreement's coming in, and there's a whole lot of other stuff coming in as well. So when I first started promoting this, I thought, oh, well, Ben got on my ear, and then I had Australia's first SMSF and investment strategy dealing with crypto, digital currencies way back in 2012. So I know the space inside and out. I saw it through the first wave. And saw it start to really pick up 2012 thereabouts. So I started a bit, and obviously it then scaled back, and now it's had a pretty meteoric rise, which you'll see. And it's not just Bitcoin. There's the whole base of the Bitcoin. It's not anything to do. We'll cover what the coinage is, but the fundamental technology is blockchain technology. So if you're not sure what blockchain technology is, it's a distributed ledger system, so that instead of one computer talking to each other, what happens to verify a transaction, it goes out to a whole range of computers that are out there and located on the internet, so that if there's 100% verification, then that transaction occurs, which is essentially what you want. So that's quite a fundamental change. It's not, again, the first real element of that was the Bitcoin, but we're now starting to see it creep into the legal world. I've had a chat with Ash in relation to the development of estate planning, so that the process, of estate planning essentially is that someone passes away. There's a period of time that the executor is implemented, appointed. Then you get probate. Then you can distribute proceeds from the estate. That's after all the taxes and loans and all that are paid off. So that can be, if there's a contested will, they can break it out to like a year. If there's a family revisions claim, it could be like 3, 4, 5 years. Is what we typically see at Abbott Mourly. So there's a lot of length in there, and the will is an extremely inefficient process for passing assets between generations. The best way of doing it is obviously through a trust, which we'll talk about a little bit later on. But the blockchain theorem, or the underlying technology there, is that when someone dies, that can then trigger a whole lot of events. So, for example, properties, if it eventually will come in, that if there's shares on blockchain, if there's properties on blockchain, and we are getting a lot more digitally oriented in terms of land titles, etc., titles for cars, titles for everything, that could actually all be triggered in blockchain, and that would happen as soon as the person's got a death certificate. That is the trigger for all of these events to happen, that they then get fed out through the internet. So that's where we're working on. Where we're at that, it's going to take a little while. One of the major issues is, of course, taxation, because a lot of the tax relief comes from the will. So if you go through and have a look at CGT and deceased estates, it comes from the will. So we're going to have to work our way around that, because these assets would transfer prior to the will. So they're almost like conditional contracts. So that sort of gives you an idea where blockchain's going. There's, huge amounts of coinage out there. Anyone can basically go out and do coin. You've got that, is it Doggy coin that Musk is talking about. Ethereum was a really good parallel to Bitcoin. Most of us know what Bitcoin is, but there's hundreds and hundreds of coins. You even saw some of the stable coins that were supposed to be run alongside the US dollar, mirror the US dollar. One that was done algorithmically alongside the dollar that collapsed last week. Those that do have the true dollar backing, then it seems to me that's sort of like, why would you do it anyway? So let's go through and have a look at general information. Let's have a look at all the stuff. Then I'll get into the crypto trust and how I built it and why I built it. So again, just going back to the documents on like your docs at Abbott Mourly, we build all the documents. So we've got the Family Protection Trust, the Leading Member Trust, the Superannuation Unrelated Investment Trust. We've got Declaration of Trust, which are going to be really important, Bear Trust for LRBAs. We have a fixed trust, ordinary unit trust, and we've got a Family Protection Trust, as I said, a standard discretionary trust. So we've got a whole lot of that, and soon the crypto trust will be coming, which you'll be able to offer to your clients. And I went and did a bit of research this morning and had a look. There's a few accountants out there, tech accountants, who are talking about, why, how good they are at crypto and, looking at all that sort of stuff, but they still fundamentally miss the point. They talk about trust, the importance of trust of crypto, but, if you don't have decent trust, the underlying document, it's a complete waste of time, as you'll see. And I also want to cover some of the tax ramifications, because the Commission is getting pretty aggressive on this. So let's cover a couple of things and what we've seen in practice. What I wanted to do to start off with, though, is sort of give you a bit of a heads up on where we're going. My background is obviously in teaching. I believe it or not, I started medicine for a year, and then thank goodness I got out of that. I couldn't imagine being a doctor now, although the guys out in the regional areas are pulling squillions, but it's not my style. So I then moved into teaching, phys ed teaching. So teaching's been a love of my life. Then I went and did a Bachelor of Laws, a Master of Laws, a Bachelor of Economics. So I was very lucky. Sorry for those younger. In my year, I'm a boomer. Deal late boomers. Because essentially I didn't have to pay anything for all of my courses, which is pretty crazy. But anyway, that's life. I was lucky to be there. So education is a really big background, and right from day dot, when I first did the first SMSF specialist advisor course, I always believed I could teach people the law, look through the regulations, learn how to think strategically. So you'll see up here, you can either get it through like your docs in the support channel, or alternatively just subscribe to me up on YouTube. And I've got 1,000 subscribers there, and you can see there's 260 videos. So you can see some that go back like 9 years of my first discussions around SMSFs, and then a lot of these light year docs, like for example, this is going to go up onto that channel as well. So it's always a great way, if you want to get a replay on anything, best just to search on that. You're going to find I've covered everything. We've got I think next Wednesday, if you've got time, make sure you come along. We've got Abbott Mourly. We're doing a good 1 hour dive on property development and a case study we recently worked on looking at joint ventures. So that's joint ventures with self-managed super funds. So that's a really important one to do. So we were, when we first started off Light Year Docs, because we were putting a new document up each week, I would then go and do a webinar each week on that particular issue. So we've been doing lots and lots of webinars, as you can see by the number of videos, and on Vimeo, we've got another like 30 or 40 or 50. So what I'm doing is next year, I find the webinars are great like this, but they're just like snippets. So you'll see each month, Abbott Mourly will have a deep dive on one particular area. I'll do one webinar with Lightyear Docs, which is going to be a public webinar once a month. And then I know Michael and his team at EO will be doing one as well. So we're not going to have so many webinars out. And what I'm going to do is spend more time building courses, because for me, you're never going to get confident unless you start doing a deep dive on these areas. For those of you who've already done the Succession Asset Protection Estate Planning Advisor accreditation, hats off to you. If you've just done my recent Specialist SMSF Advisor course, the same sort of thing. We're very lucky. Technology's improved so much compared to what it was like when I did my first ever, courses way back in 2002, when you got like a big folder, it was all face-to-face. Now we've got self-paced learning, or you've got myself doing like a 3-day course where you can ask me any questions, you're hearing me live, which is a fantastic way of doing things. Again, probably, well, definitely in this space, I'm definitely one of the top trainers here. But using this, you can see a little snapshot here, but using this program called RISE, a learning management system, is fantastic. It's got all my resources, got all the videos I've done. So you can choose now to either do a online self-paced, both the Succession Asset Protection Estate Planning Advisor or the Specialist SMSF course. We've got some great year-end offers with Talitha at lightyeardocs.com.au. And look, I love all the material we've got there. I've got a 3-day Succession Asset Protection Estate Planning course. Look, what I would suggest is I want you, if you can give me 10 days next financial year, I promise I'm going to change your life. I'm going to give you, look, I've seen it happen. I promise you're going to you take your career to the next level. And particularly as we're going into recession, we're going to hard times, it's important. Learning is earning. The more you put in here, good quality in here, the better it is. I mean, if you sat and watched the news, 24 news channels, you're not learning anything, so you're not earning anything. So what we're going to do is get a really good element. So I've got the next 3-day course is on the 15th to 17th of August 2022. The good thing about that is you're going to get my last, which I thought was my best. So each time I do this, it gets better and better. But my last one was definitely my best one. You're going to get all the slides, all the videos and everything to prep yourself up. So when August comes along, you're going to be really firing on all cylinders. And in between that, you're going to be making money doing things such as successor director, etc. I've got the 3-day Specialist SMSF Advisor course. You've got self-paced there, study now. Anyone who's doing anything with SMSFs, it's absolutely crucial. One thing there, if you would like to, I've done a 71-page book, which is now about to be published on Commissioner's views on contributions. And I pulled out contribution suspense account. I've got some really wild stuff in there from the Commissioner. If you'd like to get a copy of that, just put your name down now for Chris, and she'll make sure that comes out to you in the next day or so. But the next course is going to come up in October. Now, 2 more that I'm putting in here, and this one's a really important one for that one, is I'm finding dealing, and what you do is when you're in the business that we're in, and particularly I've got Lightyear Docs, but obviously all the tech questions, the tech support, the work we do comes over to Abbott Mourly. So we get to see advisors. And if you're not on our Abbott Mourly app, get on there, absolutely crucial. You can ask us questions, do whatever. So what happens from there is we get, I can see when questions come through as a teacher, there is a knowledge gap. And by that, I mean that the people asking me questions, effectively, they lack knowledge in some areas. And that's tough, because from us as lawyers, obviously, time is really important because we've got a whole lot of clients. It's a matter of looking at that gap and trying to fill it so that we don't have to fill it with our time. So one of the big ones that I find, and that's generally across the accounting and absolutely across the financial planning profession, is the knowledge of trusts. as I said, I've built the unit trusts, I've built hybrid trusts. In fact, I think we've got a hybrid trust. I'm not sure whether we've put that up on the platform or not. But built hybrid trusts, built, family protection trusts, leading member trusts, now the crypto trust. So I know a lot about trusts. So what I want to do is I'm going to do a 2-day mastering trust course where we're going to look at right from the very start. Who's to be the settlor? Why don't you have any beneficiary settlors? We'll look at all the taxes. So we're going to spend a really good 2 days looking at trusts, but we're going to take you to the next generation of trust, which no one in Australia is talking about except me, and that's the lifetime perpetual trust, which you'll see this crypto trust is built on as well. So it can pass from generation to generation, is basically perpetual. So we're going to be talking a lot about that, so that assets don't go through the estate anymore, which is, again, helps us with family provisions claims, asset protection, tax reduction, etc. So I'm going to go through a lot of there. Going to look at hybrids, testamentary, lifetime, leading member, family protection, offshore, and also much more. Another one I'm going to do is, because I know we get a lot of hardcore stuff at Abbott Mourly, and some of I've seen people who got really good, strong knowledge in estate planning. They'll suggest to me something which in theory looks great, but from my point of mind or my thinking, it's exposed. So what I do is I build strategies to limit risk and exposure from an asset protection point of view. And when we look at it, estate planning is not passing of assets, because it attempts to pass assets. But if you've got a family provisions claim or a contested will, we can even see now lawyers using unconscionable conduct, undue duress, a whole range of elements, even estoppel to smash out estates. As soon as you do that, wills really have lost their luster. Now, you're not going to find that at suburban law, even the big lawyers. So what we do is we look at how to mitigate against that. So what I'm going to do is a 2-day advanced estate planning course where we're just going to go through case studies. I'm just going to give you half a dozen case studies that I've worked on. Well, there's an assumption there you've done the SEPEPA course, so you have a really good basic information for that. You know your trusts, you've got all of that, so that when we do a deep dive in here, you're really going to take yourself from maybe a 7 to a 9, a 9.5 out of 10 by utilising these strategies. And look, you feel free to, during those sessions, you'll be able to ask me as many questions as you want. Now, those 2 latter ones are probably going to be smaller, but they're coming up, and I'd like to get, I want this 2-day advanced estate planning before 31st December, and also the mastering trusts as well. So there's going to be those 4 courses on offer. So have a chat with Talitha around those courses. And if you want, again, there's 10 days there with me. If you do those 10 days, I guarantee you, if you did those 10 days within the next 6 months, and look, 10 days, I know you're busy. Remember, you're doing a lot of urgent stuff that's urgent for the commissioner and the client, but it's really not putting in that learning. You're not learning stuff, you're just regurgitating stuff. So if you can give me those 10 days, have a chat with Talitha, I can tell you're going to blow yourself away. And already seen that the people who've just done this SEPEPA course, it's very hard to meet a client without talking about it. Anyway, let's get off that. Education, let's have a look. And crypto's here to stay, and blockchain's here to stay, and it's not going to go anywhere, because again, it's this old system. If I took you way back to the early 1900s, one of the acts that I love best is the Bills of Exchange Act, and that was in 1909, and we had 2 things: a bill of exchange, which is a promise to pay. So they're like fancy IOUs, but they're codified in an act of parliament that's still around. So you've got a bill of exchange which dealt with international trade, And then you've got the other side of the coin, you've got a promissory note, which dealt with domestic trade. So that if I bought something off you, in those days, in 1909, there were no checks, there were no internet and stuff like that. So you give a promissory note, and that promissory note that could then be used to cash, or you get that promissory note and you could buy it off your supplier. So you endorse it back to someone. So now whoever holds that promissory note, like a bearer bond, they're the ones who actually owed that money. They can call upon it, subject to the terms and conditions of that promissory note or bill exchange, etc. So when we have a look at that, that then transposed to obviously checks. You go to the banks. Now everything's done by internet banking. And the next stage obviously is going to be digital currency, where we start to transact. The first step of that, obviously, the governments and everyone let everything go. So Bitcoin was one of the first in 2009 that came up and used the blockchain architecture. We're starting to see now for trading of stocks, blockchain is going to be around very, very shortly. And the beautiful thing about that is that you don't have to wait 2 or 3 days. Like trade now, once you do the trade, that's it, it's all gone, because the transaction sent off to the bank, it's sent off to here, sent off to there. So everything is then verified. And once it's all verified, everything happens. So there's no waiting, there's nothing like that. Now, of course, that's going to reduce a lot of back-end jobs, but that's the way, shape and form it is. So stock trading is going to be fundamentally shifted, which is also good, because that now means that companies such as Lightyear Docs, which is not listed, it's a public company, but it's not listed. We're going through a growth spurt, and we've had a lot more people who want to come in, although our shares are pretty limited now. But it means that people can then sell on that exchange, because it's not going to be limited to only listed, because when it's on blockchain, you don't care about listing. It's actually going to be whatever's sitting in the blockchain. So Bitcoin was the first one. As I said before, I changed my SMSFD to include it, investment strategies. If you have a look at our investment strategy, it's pretty good on this as well. Crypto prices rose, I'm going to show you. Essentially, right from the start is through the GFC and Australia to a less extent, but definitely US, Europe, a lot of countries just simply went to what they call modern monetary theory, where they just pumped out a lot of money. So the concept there was, well, what we'll do is we've got a hole in the balloon and the balloon's deflating, so let's get a bigger pump and then just keep on pumping it up. But at the end of the day, the balloon gets bigger and bigger, and there's still a hole in it, and there's probably multiple holes in it by now. And the more money you pump in, effectively, the less effect it has, and ends up, getting bigger and bigger until it almost busts. And, there's a lot of people, I did do a Bachelor of Economics. In fact, I did it through, I should show my picture here, but my lecturer and the Chancellor of Sydney University, when I went through, I just forget his name, it's terrible. He was the original Bretton Woods Agreement. So, absolutely legendary people, Sir, I forget his name anyway. So anyway, so the GFC came about, and you're going to see it in the price. The other one, obviously, with COVID, there's like huge amounts of money pumped in. If you have a look at the US, they owe $30 trillion, which is, they just keep on piling it on. Let's just spend, money here and there. But that's not saying anything. At some point in time, if you go back and have a look at Milton Friedman, I've been watching some of his old videos that, he's different. He's a supply side guy. So we're starting to see all that money flowing through is having a fundamental impact on inflation. At the same time, my generation, the baby boomers, where there's 5 million of us, are virtually all out of the workforce. So that's a huge impact on the work, which is then harder for other business owners, as you're finding people to work, because the senior, more experienced people have left, and a lot of the younger generation don't want to be accountants, they don't want to be lawyers. So we're going to have this fundamental problem that obviously wages will go up because people don't want to do that. But anyway, that's I don't want to get too involved with that. I want to show you the trust. The one thing about it is, of course, central governments, don't like Bitcoin and all that sort of stuff, because it depends on whether it goes through an exchange or not. So they got information from the exchange, because if it's just done outside of an exchange like that, remember that promissory note? Bitcoin is just like that promissory note. Effectively, it can be a lot of anonymity there. So that's where it's been used for, obviously, drugs, hacking, money laundering, all of that sort of stuff. So that's one of the areas that the governments don't like. So that's why we're starting to see the governments building their own digital currencies. But the problem about that is that, can you imagine if you've got blockchain and digital currency, the government's going to know every second of the day exactly what you're doing, where you're spending your money on, etc. So that's good and bad. Can you imagine the tax office having all of that information? And things you can't disagree with it because it's all sitting on the blockchain, it's been verified. So it's not going to go. Blockchain is a bigger picture than coins, but it's also important. So you can see here, this is a chart from Investopedia on blockchain 2009. Is it Satoshi Nakamura, the legendary? No one really knows him. In fact, there was a court case in the US recently around this, and there was an Australian guy who was supposedly Satoshi, but no one knows. But that's well and truly above Grant's pay grade. So you can see it's going up and down, up and down. I remember in about 2012, it got really hot there, and a lot of people were, in fact, joining in investing clubs to do that. And then it really jumped down around 2014. That would have been a good time to get in. I knew a few people went in, and then gradually went up, and it went up to 68,000, and now it's down around about 28 or thereabouts, I think, in May. So it's extremely volatile, but that pumping in of money for a big period of time has really sort of inflated it. And of course, that then brings the profiteers, the people who then go and sell products into cryptos. This came across, and I thought I had to do this because this just came across my desk today. So for me and King, he talks about crypto and why it's still taking off. It's become more mainstream because the hedge fund guys or the VCs are into it, and also now you can get EFTs around it, and that's now starting to pick it up. But it's not just about crypto. Look, this is he's doing a course or whatever, but they're just sales guys from Banyan Hill, which are fantastic. Not fantastic, but fantastic at selling. So, but blockchain is the real area. As I said before, it's going to fundamentally change the legal profession, which is fantastic. But it's still, from me, my perspective, is still unsophisticated, because, and I'm going to show you a little bit later on from my experience, it's still a growth asset. So if we go back and have a look here, we're looking for the growth, and then, of course, there's a lot of losses. I mean, there's a lot of losses that have come over the last probably year or so as people go in, and then the market has gone down, the speculative market's gone down. How it reacts with inflation, we don't know, because in all this period of time, there has really been no great inflation. We're looking at virtually zero interest rates, which makes sense for people to borrow to get in here if it's going up. But obviously on the downside, there's going to be huge losses. So I'm not sure about what that means, and no doubt you've got some clients. Essentially, it's a capital growth play. So you're looking for gains. There's a lot of people who day trade it. In fact, we dealt with one this will lead into where we're going. We dealt with one client who had a family trust, but they've been dealing with the crypto, and they were doing probably about 5 to 10 trades a day, but it wasn't in the trust. So we had to do a deed of ratification to say, hold on, all of these trades should have been through the trust and booked in through the trust. So you do a deed of ratification and a declaration of trust, which If you've found that with your clients, come to Abbott Mourly. Again, use our app or call it's the best thing to do that. And then we can sort that one out there for you. But if it's a sophisticated market, you'd end up with like a classic one as a unit trust or a company. They all pay income. Things like gold and silver don't, again, they're growth plays, but not necessary because the market is now sophisticated enough to get income out of those. With the Bitcoin, with the cryptos, it's not so sophisticated yet, although I'll show you what to do. What you would do is, for example, with gold or this, you would actually lend it to someone so that I might lend my Bitcoin to you. And so then you become the legal owner of it. And effectively you will then still owe me that amount, but you'll pay an interest rate based on that. Now I could have a call option on that to get the Bitcoin back at some later stage. But again, so instead of share lending, you could use Bitcoin lending or Ethereum lending or whatever. Options are another way of gaining income so that, I can write an option over my Bitcoin and you pay me a premium for it. Trading cryptocurrencies are popular, but you've got a good trading platform. So I've got 5 of them there. Binance, Coinbase Exchange, which is pretty good. Binance is obviously the largest. You have a look at the volume. FTX. And you got a couple in Australia, but I think there was that one in Australia that ended up folding. So you just got to be really careful about what you do with it because it is sitting out there in the ether. The number of people who've lost money because they've lost their wallet or their login details is a bit like a Swiss bank account. The tax basics. So let's go through. The Commission has done a lot of stuff on this. I'm not going to worry about doing a booklet on it again. If you want to get that all-encompassing ATO guide on contributions, particularly leader, it's a fantastic one as you go down the track because it tells you what you've got to do, if you're doing suspense or you've gone over the limit, all of that. So it's my go-to guide. I couldn't have even written it any better. But the Commission's got quite a lot on tax treatment of cryptocurrencies, which I want to go through. You can see there's a lot on SMSFs and various issues there. So let's have a look at the tax basics. It's not seen as a currency it's not seen as a currency, although it does have all the features of a currency and that you can use it to trade, etc. But it's not adopted in Australia as a currency, so you can't just go down and utilize that. And look, most jurisdictions are not going to allow it to be a currency, because it takes away from their fiat currency. So that will actually devalue the currency. Can you imagine if Bitcoin came in and suddenly 70% of the transactions in Australia were done through Bitcoin? What would happen to the Australian dollar in terms of value? I mean, if no one wants it, you know what it's like. It's sitting out on the corner fence, so the value goes down. So fundamentally, economies or governments aren't going to let Bitcoin be a currency. And so everything is driven. Now, when it comes around to central bank digital currency, something to usurp or a digital version of the Australian dollar, that's different because they're in control of it. And it'll be interesting to see what they do when they start mining. I'm not sure if they'll worry about mining, they'll just pump it out. Is it trading stock? So there's a couple of really interesting ones that I picked up here. Being a tax lawyer by trade, effectively, I built my stuff on tax law and did my master's in tax law. When you go through, the Commission has quite a bit there that if you're in the business of trading, so you've got you can show there's a business there, then effectively the crypto can be trading stock. It's got four areas there, and you'll be able to, when you get these slides, you'll be able to get that link there. It's got 4 areas there as to when you may be considered to be in the crypto business. So that's not a bad thing, but it's going to be, it's interesting because it puts that out there. The problem about that is that a lot of your clients are going to want to say that they are trading because If you trade and you get the downside, because if it's trading stock, you mark to market each year. So you're probably going to end up with huge losses for this financial year coming up 30 June. So if any of you got clients that sort of you believe there's the way they're running it, the quantum they're doing it is more of a business, let us know. We can do a PBR for you to the commissioner around that one, because losses obviously there. And the commissioner, it's nice of him to put it, because when he did all this, it was all on the upside. So you can see why he's doing it, because if you can say it's trading stock, there's a mark to market each year. The second thing is you don't get that CGT discount. So that's one thing. So, but on the upside, it's good, but then on the downside for the commissioner, it's not a good thing, because suddenly all those losses are on income account and can be offset against other income. So that's important. The other one, which is interesting, and this is like really old and comes from law as Whitford's Beach in 1972, where we had and these were the days before capital gains. There was a section 26E, I think, or F or whatever, 26A, sorry, which was sitting in the Income Tax Assessment Act 36, that if you engaged in an isolated gain or profit-making scheme or undertaking, then any profit out of that would be included in your assessable income. So he actually raises that. So it's not a business such as trading stocks, so you're not turning it over all the time, but you have decided to engage in this investment as a isolated gain or profit-making scheme or undertaking. Now, the issue about that is if he can pick you up there, then it becomes any gain is included as ordinary assessable income for you. So that means, again, you don't get the CGT discount. The good thing about it is if you're in SMSF, apart from trading stock, everything's on CGT account. So the specialist rules in relation to that. So it's not a big issue. So just watch out for that, because that's an old chestnut. I haven't seen the commissioner play that game for a long time, but anyway, it's out there. Now, the other one is it's covered by capital gains tax. And that means you obviously if you're an individual, get a 50% discount. If it's done for a company, you miss out on those discounts, trusts, etc. Now, the important thing about this is because it's a capital gains tax asset, if you're a non-resident, then it's only assets that are Australian taxable assets, which if you're looking at Bitcoin and all that, they're not going to be taxable Australian assets, which is quite interesting. But for Australian residents, it doesn't matter where it is, you're taxed on assets all around the world. This really gets down to the nub of everything for your clients. And again, we're right at the crux here. So this I pulled this off the ATO community, which I thought is Dean Whitford. What about large volume mining? Absolutely. So you'd be engaged in the business there. So that would be trading stock. Dean, if you get these slides and click on that link, he actually does talk about mining in there. So it's a fantastic question, Dean. So if you're in it doesn't even talk about large scale, but if you're in that mining, you should be treating it as on trading account. Definitely would be caught up in that. You'd rather be on the trading account, because if there's losses, you can take up. Anyway, this is interesting, and this really goes to the nub where most of your clients are. We've recently been purchasing cryptocurrency on Binance using funds from a family trust without realizing it has options to create profiles for company trust accounts. Generally, a lot of the exchanges, particularly overseas ones, don't recognize trust accounts. So I know Binance, I'm sure it does come. Look, I don't know. I'd have to go and check. Our current account has been verified under my name as an individual. Funds are being contributed by all the individual members into the trust investing bank account and then on to exchange and trade. We've all been using this account to trade. That doesn't make sense. Do you understand what I mean? So it's like everything's, when clients don't do it, this is why I built the crypto trust. So this stuff doesn't happen. I'm currently at a loss as to what to do and have a few questions. How can we now prove, because there's a whole reason, and we'll go through it, the crypto assets owned by the trust. We have bank statements from the trust investment account depositing money. But again, how do you know? The question is, when the money goes out to you to put into the thing, how do you know that's not a loan? What they've got to prove is, how do you know it's not a loan to the member? It's not a distribution to the member for them to go and invest. How can you prove that? And of course, you know what the commissioner is going to be like. He's going to be very loath to do that. So does this mean all profits and losses will now be carried by me as an individual as CTG because the account is verified under my name despite being used by a number of people? We also have a few different cold storage wallets that we have already moved coins off onto. How can we prove the trust owns these wallets? Will this be count as a CGT event? Now, going into wallet, obviously, if you own that, it's not a thing, but if you can see it's going from the trust. So you can see this is where most Australians are in terms of crypto. So that's why we want to go and tighten things up. And now, if you came to us, we at Abbott Mourly, we've dealt with a few of these clients and we do deed of ratifications and stuff like that. But let's go and see what the tax office has to say. So again, this comes straight from the ATO community. You know, you can go and find it if you want. If the account was set up in your name, you would generally be treated as the owner of the cryptocurrency and you'll need to declare any income or capital gains. To demonstrate that someone other than you had beneficial ownership of the cryptocurrency that you purchased and traded, you would need to have documentation that shows the legal and beneficial ownership. And that's what we're good at Abbott Mourly doing. This is the same with the property in question was cryptocurrency, company shares, or any other asset. So basically a declaration of trust. Ownership of the crypto must be clearly established by evidence of proper record keeping, including whether the account was set up initially in your name or the family trust. Evidence may include account statements from the platform, which is going to show in their name, so their stuff. The initial registration or application, their name, their stuff. Terms and conditions of the platform, stuffed. Payment records, stuffed. Relevant bank transactions, maybe, but then what it is. Other evidence that might help with things like the terms of the trustee, probably it's going to be crap because they don't really cover this. Because what they're really doing is they're acting as a custodian for the trust. And most of you know Bare Trust, so they're acting as a custodian for it. And if you don't have that provision within the deed, you're stuffed. Trust resolutions, stuffed. Minutes of meeting a trustee, there might be a couple, but again, you want to have that formalised version. How the cryptocurrency being treated in the relevant books of accounts, other accounting records such as journal entries and ledger accounts. Final one, given the electronic nature of crypto, you have to make sure that there's clear separation between the trust assets and those of the trustees or beneficiaries, because again, you don't know whether it's a loan. It could be a gift from the trust. So you can see this is what's going on in Australia at the moment. And particularly in the last year, there's been a lot of people who made a lot of money, also losses as well. So we really need to do that. So I've been thinking about this, and look, I knew about this problem the last couple of years. So it's just taken a while. I thought, well, shall I build one or not? And Ben kept on giving me a boot up the bum. So I said, yeah. Look, so when we have a look at discretionary trust is good, you know, family tax benefits. So you know that you can stream income, fantastic. So you can put it across all your family members, you can put it in a bucket companies, other entities, so on and so forth. So that's fantastic. Asset protection, the crypto is held in the name of the trustee, but remember a lot of exchanges won't let you put in the name of trustee, which will do. So that's got a fundamental issue there right from the start. But beneficiaries have no right or entitlement to those assets. So that if the beneficiaries get sued, get caught up, then effectively you're in a pretty good position because the Bitcoin or like I'll just put the crypto. And remember, it's not only that; it's also non-fungible tokens, other stuff like that is not going to be able to be accessed directly. Estate planning again. You know, if you've got it sitting in there, and if you go back to this here, and look, I'm not saying anything, but look, if where it starts, who knows what Bitcoin's going to be like in another 20 years, 30 years? I've got no idea. But you can pass it between generations using a trust, and it's not going to be taxed again. So what you'll do is you're going to have all the children anyway, the lineal descent. Well, depends on how you've written the trust deed. Most are too open, but you're going to have that limit going through. So discretionary trusts are good, but they're rubbish. So what we've got here is I've built this discretionary trust deed. I just want to go through and show you there at this stage. If you'd like that, or you've got any necessity, or you want to have a look at any crypto transactions, please feel free to jump on our Abbott and Mourly app, which you can get from the Play Store. Set up an account, there's no cost, and then what we can do is you'll then be able to access it on your laptop or basically wherever. And then you can ask us questions. One of our team, if you've got a firm, you just have to give us the emails of your clients, of your staff who want to be on there, and then we build a dedicated channel for you, a support channel where we can deal with each other. We can, put up all documents, work on documents, etc. So this is available in Abbott Mourly. Once I've got it bedded down, because it's quite revolutionary what we've got here. Once we've bedded it down, then we'll offer it up to a light year. So it's based on like our family protection trust, which is Essence. So as I said, there's your Abbott Mourly app. Just go and have a look there and make sure that you're available. But we've been doing crypto for a long time now, and as I said, we want to go out and start building blockchain around estate planning. Okay, so let's go through a few of the core issues for us around this crypto trust. So the first thing is we've got the trustee. So that's fine. So normally you're going to have a corporate trustee, which is crucial. You could have individual trustees, which is one way of potentially saying, look, the individual was investing on behalf of the trust, which is one way of doing it. Problem about that one is then that opens you up to asset protection, because the individual is, if someone pings the individual, then trustee in bankruptcy is going to say, well, hold on, you're doing it on your own behalf. So what we do is we have when I look here, so we have a crypto and digital custodian trustee. So if you have a look at it, you've got your typical, in fact, I'll just bounce out of there and I'll show you what it looks like on a whiteboard. If I have a look here, stop sharing, and we'll just put the whiteboard up so you can have a look. Okay, so in this one here, we're going to have our trust. So this is our crypto trust, so that's okay. We're going to have our corporate trustee for asset protection. So that's the corporate trustee. We're then going to, and I'll just put in here, a line of, and I'm going to call them crypto pointers. I'm sorry, I'm just pointers. So let me just go there. So you're probably going to have, it might be, for example, John, Sally, and then Chris. So it goes, these are the ones down the line, which is important. So we've got a line of crypto pointers there. So that's on the crypto trust. And then obviously underneath here, we've got our range of family members and entities, which we can distribute to. So that's our beneficiaries there. So that's fine. And if we have a look there, so that goes down there. So that's fine. Now, when we go and get the crypto, we're generally going to go into an exchange. So I'll just put the exchange over here. So that's the exchange. So now what we're going to do is, we said there's obviously issues there, and you can see what a nightmare, giving it to people. And the guy said it wasn't one, it was like giving it to a whole lot. So what we have in the meantime is that we have here, let me just do this one, nice triangle. So what we have here is a crypto custodian trustee. So much the same as a bare trust is that this person is authorised to deal with the exchange on behalf of the crypto trust. So it's not an agency; it's stronger than an agency. It's actually a form of declaration of trust. So it's the same as a bare trustee. You know, this person's got the money; they're always acting on behalf of that. Now that's embedded within the deed. Let me go back and share the screen, so it'll give you an idea. You'll get that picture later on as well. So if we have a look here, so that's the crypto and digital custodian trustee. So again, we want to make sure it's for blockchain, NFTs. So it's not, you don't just limit it to obviously cryptos, because there's going to be a whole lot of stuff that's coming down the track. So then we do a declaration. So there's got to be a declaration of this constructive trust or this custodian trust. And when we do that as part of the documentation, Abbott Mourly, and that's why I need to work around in Abbott Mourly before we put it on Lightyear Docs to make sure it really fits the bill, and it's going to be easy. There's going to be also, there's potential, I've written into the deed, a crypto and digital manager. So they're the person who can actually just focus in on that part of the trust that deals with crypto. And you'll see part of the provisions of the trust. In fact, I've just got one here that I'm looking at. So in the recitals of the trust, we've got here, the purpose of the trust of the trustee invest, trade, barter, and manage crypto and digital assets. So the digital manager may well be that person who is the crypto and digital custodian trustee. The choice of distribution, obviously we want it pretty wide, so we can do net income, accounting income, crypto gains, or capital distributions. You don't want to be stuck with just net income, because if there's losses, then you can't, if we build up losses, you can't transfer those out. So what we want to do is have obviously a ability to transfer out accounting or crypto gains, even though there might be tax losses inside that fund, or capital losses in that fund, depending on how it's accounted for. The crypto trust appointors, so you want to have that line of succession, so that it goes, you'll see down the bottom point there, the Perpetual Trust. What we do is we set it up in South Australia, where the rule of perpetuities doesn't apply. And let's face it, doesn't matter where the coin is mined or you acquire it from, or the trustee is in Queensland or Western Australia, whatever. By choosing South Australia, the rule against perpetuities doesn't apply. So that allows a long-term estate planning, which we now mean to bring that into vogue by having a line of appointors. So you don't want to be in a position that this appointor, is attacked, or there's family provisions claim against them. You want to move it on to the next person so that you've got this good, strong line of succession. The crypto wallet and also the vault that we're talking about, that'd be held by the crypto and digital asset manager. And then it's up to you whether it's going to be the trustee or the crypto trust appointor. Obviously, whoever holds that really holds the keys to the kingdom. This is why it's really important when you're doing investment strategy, if it's an SMSF, that you've got to be really careful about that. What we've got in there is also beneficiaries. We've also put a bloodline wrapping around it, so that the only bloodline lineal descendants, you can have relatives if you want, but they've got to be the same bloodline of the crypto trust appointors, past, present, and future, are included as beneficiaries. So you're keeping it really tight. Family style trust election there, but it's only going to be those bloodlines. So you can't have stepchildren or whatever. You can still bring them in because they can be added as beneficiaries, but prima facie it's for bloodline, not only now, but one that we find is, for example, if dad dies, Mum's now in control. She's the crypto trust appointor. She can't then, if she goes and gets married or lives with someone else, she can't distribute to that person. And then that can be built in, so it's irrevocable, that amendment clause. So lineal and also the perpetual trust as well. So again, we use that South Australia. So when we go back and have a look, this is our crypto discretionary trust deed. It's got as I said, it's got all those bells and whistles there. From that perspective, if you want to go down that track for the client, this is like the vehicle this is the vehicle because it's set up so that all of the issues that are faced here, all the issues that are faced here aren't even caught out in the first place because there's a process, a procedure, and more importantly, a legal reasoning on what's happening for every step of the equation. So obviously, when you look at discretionary trust, the key thing is tax reduction through the utilisation of the family group's average tax rates, which are given, asset protection and that. But we still need that process of being able to go and invest on behalf of the trustee, because that's what happens all the time. But most of it, in fact, probably 99.9% of it is done incorrectly. And it now means that you poor things, you're going to have to deal with your clients and set up and write up all of this sort of stuff. And even then, it's probably, Jimmy, how do you know it's a loan, not a loan, not a gift? How do you know who they're doing it for? Whereas what we've done is build a process and procedure for that. So that gives you an idea of our crypto trust. So Kayleen, good to see you again. We're using a successor directed company with a LM Trust as the shareholder corporate trustee. So the company is the owner of the digital assets. Do you see any issue with this structure? Not at all, again, Kayleen. It's good, but what I would suggest is you can still use your LM, your successor directed company. What I would do is with the LM Trust, if you are doing some crypto stuff, or your client's doing a bit of crypto, you might want to upgrade it to the crypto trust, which has the same characteristics as the leading member. So you're still going to have the same leading member lines, or what I'll call crypto appointors. But what it'll do is it's got all that other stuff with the crypto, because again, if you've got the company, how do you know that it's not being done in the company rather than trust, because it's not recognised on that exchange? Because the last thing you want to do is get into it, not with a fight with the commissioner, but you're going to have to go down that track and cover all of those particular issues. If you hold on for a sec. Anyway, what I'll do is I'll just stop it there. And if you've got any questions, please feel free to come back to me. Anyway, it's Grant Abbott from Lightyear Docs and Abbott Mourly signing off.